809 Coyote Country News. Good morning to you, and let's head to the internet and say good morning to Erik Peterson, talking about real estate this every Tuesday morning in the 8 o'clock hour. Good morning, Erik. How are you?
I'm doing great today, Tom. How about you?
I'm doing fantastic. A little cold, but fantastic. You know, when I used to play basketball, I'd go into the paint and I'd give a guy a little elbow and I'd say, "Get your weight up." Uh, right now, because of the housing market, we're saying, "Get your credit up." Talk
Get your
about.
credit up. That's exactly right. We've had some good news finally for creditors and those folks looking to buy houses. Interest rates have actually pulled back and dropped for the fourth consecutive week. On a national basis, they were hovering around 7%, and depending on your credit, you can get below 6 in most cases now. So we just want to talk to those people right now that are considering buying, maybe put it on pause for a little bit, but have been worried about their credit.
So, what can you do to, as quickly as possible, make a move on your credit and get it in better shape?
Yeah, that's a really great question. The first thing you really need to do is look at your credit score. If you ask the average buyer out there, or even really the average person, they don't know what their credit score is. I would get online. You get a free credit report every year from all three of the agencies. So that's really a good place to start. And then look for discrepancies. Look for items on there that may or may not be right. I just had one hit my credit. I was alerted by my credit card company that I dropped in credit. I had a judgment against me. I had moved out 2 years ago from my house. And as it turned out, nobody returned the Wi-Fi box. And so they ended up getting a judgment and hit my credit. I lost 25 points in a month. Called the company. I'm in the process of disputing it, but that's a really good way to get it up. So check your credit score, number one. See if there's any past due amounts and bills that you may have forgot about, any liens, any bad debt. Get those paid off right away. And then also challenge anything that you know on your credit report that shouldn't be on there or that you have an issue with. A lot of times, if you challenge them over a certain amount of time, they will remove those for you.
It is easier nowadays to deal with credit issues. Back when you and I were growing up and getting into the marketplace, credit was a scary thing. It was like in the closet kind of thing. Now you can access it on your own computer. You can take a look at it. You can monitor it. A lot easier to do.
Yeah, absolutely. A lot easier to do. And then also it's easier to get your credit up by paying off those past debts. And then let's say you're considering buying a house, maybe it wasn't affordable. As we've discussed before, with every 1% rise in interest rates, that's 10% less in affordability. The same goes true on the way down. So if rates were at 7 and now they're at 6 for you, maybe you were qualified at 300,000. With a 1% drop, you might be in that 325 qualification range. So review your credit score, work with the local lender, as we've talked time and time again on this particular show. Find somebody that's local that can help you out. There's credit agencies out there that you can pay to have your credit score quickly increased. And then worst case, if you don't have great credit, go get a secured credit line. You can walk into the bank, you put some money down. If you don't make that payment on a monthly basis, they will take the money right out of your secured account. Less risk for you, less risk for the bank, but that will also help your credit score go up. And then certainly you can always look for a co-signer as well, somebody to help you either get your credit up or help you qualify for a loan of any type, specifically on the mortgage side.
Erik Peterson, Proven Realty EXP, live on the Newsline with us every Tuesday morning in the 8 o'clock hour. And you can catch up with his reports and with his podcast by going to his website as well if you miss it here on Tuesday mornings. What part of the world are you coming to us from today?
I'm in Laredo, Mexico today, down here on the Baja. It's about a 7-hour drive from Cabo. It's really nice. The beaches are nice, and just lucky to get out of the cold for a week. Planned on getting out to the beach yesterday, but ended up being on the phone all day helping our clients out, and looking forward to getting out there today.
You've got how many agents here in Williston?
There's a total of 22 on our team. There's actually 12 agents. We've got 2 in Watford City, one that works remote as well in Watford City. She lives in Indiana and she's great. And then we have one in Dickinson. So there's 7 of us in Williston all told.
How is it working in Watford City? Because we know that they're similar in that the economies are similar, the job markets are similar. What about the real estate markets? Are they similar?
Yeah, they are. It's a little bit different because there's less inventory there, and depending on the time of year, a lot more demand. Watford City has a higher percentage of people that are drillers down there that go out there and drill on these oil rigs. They're typically cyclical in nature. A lot of the pipeliners come in that way, a lot of the gas plant workers. So there's a lot less consistency of income. And a lot of times to qualify for a loan is, you and I've talked before, you need 2 years of credit of history at that job to get your credit up. So they're coming in a little more transient there in that area, so it's a little higher or harder to qualify. And then also there's just not as much inventory, not a lot of builders in that particular area. So we typically think there's about a 5% difference in price. It's oftentimes for the same exact house, 5% more in Watford. And then Dickinson's typically 5 to 10% less on a per foot basis.
Does my home need to look like a model home when I put it up for sale?
No, it doesn't.
What can I do to make it look better, but not go overboard?
Yeah, that's a great question. We did talk about that a few weeks ago. So just to recap on that, you want to make it showable, make it clean, make sure that it smells good, declutter a lot of that stuff that's in your house that keeps people from wanting to make an offer on it, and then help us help you make our jobs easier by making it showable, be available for showings, which is really important, and then most specifically, just price it right and market it effectively.
You said that a lot of times the real estate agents pop in on you. You've got to be open to that if you're going to put your house on the market, I guess, huh?
Yeah, absolutely. I can't count how many times I get a call or a text from an agent. Hey, we're right outside your listing, and we obviously ask, when do you want to see it? And they say, how about right now? So the more flexible you can be, the better. We do have some cases where people need, 24 hours notice. Maybe they have dogs or small kids or work weird hours, but we've really dealt with it all. But I would say the more flexible you are, the better chance you have of getting people in there, which is something that as agents, we can't make people go in your house. We can't get them to buy it. They're going to buy it if it feels right for them. And so it's really just comes down to getting eyes on your property and getting as many tours as you can.
I know you've got to get to the beach, but when are you coming back home?
I'm not sure exactly. I'll let you know when I do, but it's got to get a lot warmer. I'm not as tough as you and the rest of the crew out there. But before I let you go today, there was one other thing that somebody asked me the other day. Is paying off your credit cards good for your credit? And again, that's a trick question, Tom, and it's really a loaded question. Some cases, if you pay off and shut down your credit card and reduce your authorization and your credit ability to borrow, it can actually negatively impact your credit score. So don't necessarily pay off and shut down all of your credit cards. It might actually hurt you in the short term and keep you from buying that house.
But is it important to keep the percentage of credit used that's available low?
Yes. Yeah, as low as possible. They call that credit utilization. Depending on the loan company, they want to have that number below 30%. So it's better to have two credit cards, each at 30%, than it is to have one at 60%, if that makes sense for math and your credit rating.
So my math is not the best, but on $10,000 worth of available credit, I'd want to use right around $3,000 of that and leave the rest available.
Yes, correct. Leave $3,000, get a couple of other credit cards or under $3,000. According to these companies, it just is less credit risk for you, which should increase your score over time and then allow you to qualify. The other thing that we haven't really discussed yet is you want to make sure to have consistency of income. That's really hard to do with COVID. The last few years, people got laid off. They took some time on the sidelines. Maybe they've switched jobs around. In order to qualify, you really want to stay at the same job and in the same type of work. If you're moving up in pay, that's one thing, but you certainly just don't want to be bouncing around, as that's a higher credit risk for lenders for you.
How about self-employment? How is, because more and more people in the gig economy are self-employed. What should those folks be looking at as far as being credit worthy?
Yeah, great question. It's changed a lot. Back in the days in the early 90s, even into 2000s, you were self-income. If you had self-income, you could be stated income. So in the first house that I ended up building, I just said, hey, I asked the banker, how much do you, for my loan, what's my payment going to be? And of course, then he asked, how much do you make? And I said, hey, whatever it takes to qualify for that loan. Long gone are those days, certainly. So self-employed, you just have to have 2 years of tax returns if you're 1099, and just make sure that you have good taxes. A lot of people like to write off personal stuff on their taxes, boats and personal vehicles and trips and all this other stuff. If you're looking to buy a house, that can be costly when it comes time to qualify for a mortgage or anything else credit related.
So do you have to see a tax professional if you are self-employed to get ready for buying a house? Is that advisable or not?
You don't have to. Personally, I'm self-employed and I have a tax expert do it. I don't have time to watch all these rules, and there's a lot of write-offs you might be missing out, especially if you're self-employed. So yes, find somebody. There's some really good ones in Williston. Find somebody. You could also do it online, but get it done professionally so that you have those tax records updated and available.
Good conversation this morning. Anything else?
No, that's it. We've been seeing a lot of people now looking to get into the housing buying. There's some really good deals out there. Again, you've got to be aggressive. You got to be ready to go and get pre-qualified. That'll help your chances when we're helping you try to buy a house. Other than that, get your credit up, monitor it up. And then if you can't get your credit up right away, there are third-party agencies that are credit repair companies. Do the vetting, make sure that you check into them, make sure that they're legit, but they can oftentimes in a short amount of a couple of months get that credit up for you. And other than that, just have fun. It's a cool process, and something that you need to do for your family if you want to really personally and professionally grow.
Get your toes in the sand for us today, Erik. Thanks much.
All right, I will, Tom. Have a good day. Thanks for having me.
Erik Peterson with Proven Realty EXP each and every Tuesday morning in the 8 o'clock hour.